Okay, one more thing, which they will definitely they ask you in exam, because that is also important. That is, how to say, the usage of funds on the borrowing cost. What does that mean? Imagine that you took loan from here and you took a loan of 5 million, for example, and your construction period goes like this. And this is a period when you are capitalizing. So in this part, when you are here, there is some interest expense, there is some interest expense, there is some interest expense, and there is some interest expense. Okay. So you are paying interest. This is your interest expense. Probably you have taken loan at 8%. So you have 8%. Now this 8%, which is beyond the construction period, it goes to income statement. We know that. And this interest expense will also go to income statement. This one will go to the balance sheet as capitalization. This is what you have understood so far. But you took $5 million loan. Now the thing is that this $5 million was not used in one day. You will be spending this money throughout the construction period. So it means that you took loan from bank at 5 million. The bank would start charging you interest expense at 8%. You took 8%, so banks start charging you interest. You also have here interest income. Okay, you need to understand that when you have this 5 million in your hand, you do not spend all of that in one day. So probably you find some source where you can invest this money, and you got a bank which is willing to pay you 5% interest. So some part of the 5 million, maybe, I don't know, probably 3 million. Some part of that you will put in a bank and you start making interest income. Okay, you start making interest income as well throughout this period, probably until here. Here you will not have cash because your cash will finish here. When the construction will finish, your 5 million will finish. But in this period, you got some interest income as well, because the spare cash, you naturally speaking would not leave at home. You are putting in some bank and earning some interest. So then what do you do with that interest income? So the same rule will apply. You have here this portion. There you give 8% to, you have interest expense at 8%. You have interest income at 5%. You will calculate how much is the expense. For example, your expense is, I don't know, $20. And during the same period, your interest income is, I don't know, $6. So you subtract them both, and $14 you take to the income statement, because it was expense in the income statement. But before you take it as expense in the income statement, you also have interest income. So the net result of interest expense and income should go to the income statement. And then the same rule will apply here. Here you are paying interest. How much interest you paid? You paid 100. You want to capitalize 100 onto your asset, but you will not capitalize 100, because in this period you were also putting some money in the bank and you got something like $20 as interest income. So the net of 120, which is 80, this you will capitalize. Okay. So you will always capitalize the net interest expense, and you will also take to the income statement the net interest expense. This I'm sure I can, how to say, give you a guarantee that borrowing cost, this concept question will come, where you have interest expense, you have interest income, and you just keep in mind that you will take to the income statement the net amount, and you will capitalize the net amount. You will not capitalize all of that 100. 100 you paid, but you also bought 20 from some other bank. So that was a benefit. It must be taken into account, and only $80 interest can be capitalized again. The approach is that IFRS is trying to allow you the minimum capitalization. You said, I want to capitalize 100. IFRS will come in between and say, why do you want to capitalize 100? You have 20 here, which you earned. Your net interest is only 80. So only capitalize 80. So that was the only topic, last topic, which was left from this borrowing cost. Otherwise, this standard is finished. Yeah, we'll do some questions and then we'll do more things there.